Hey folks, Dan Frio here with your market update for November 1st, 2024. And yes, you read that right. It's 12,000. When it first popped up, I thought they were missing a zero. I'm like, okay, that's got to be 120,000 new jobs created in this payroll system. It was 12,000 jobs just created. So this is the concern that we had because of hurricanes and the strike and everything else. So let's get to the news for today. Here's where rates are. They bumped up just a little bit yesterday. What's going to happen today? Well, these most likely are going to come plummeting down. And the reason behind that is right through here. The jobs market is it's completely confusing the market. So instead of me going through all these numbers with you, this is what I do on a daily basis. We go through the average hour earnings and all this other stuff. Let me go over to Rick Santelli, because he just came out with the brand new announcement of this data, and it's only out maybe about an hour ago. So if you're watching this, you might not even realize what the market's doing right now. So that's why we do this. So right now, let's get over to Rick Santelli at the CME Fed, not the Fed Watch, but it's Rick Santelli on the CNBC to give us the latest news on the employment numbers. So take it away, Rick.
For the October jobs report, Rick Santelli has that number. He will in about a second. Hey, Rick.
Yes. The big jobs report, and the prophecy came true. Jobs light, 12,000 in non-farm payroll. That is the lightest going back to December of 2020.
And that was COVID. So here's what's going to happen. A lot of people are going to say, told you so. The market's collapsing. All this is happening. We need to see how this data really reflects in. We need to see how the storms affected numbers. We need to see how the strikes affected numbers. You can't just say, well, the last reading was 250,000. It was much more than expected. Now it's much less than expected. So the Fed's sitting there saying, what do we do? So that's the dilemma right now in the bond markets, the equity markets, and everything. But the good news is the CME FedWatch tool is just basically spiked all the way up to 100%, well, close to 100% that the Fed's still going to cut. So let me not take the juice out of Rick Santelli's report, and he's going to cover all this data. So let's get over back to Rick's. My apologies.
And partially explained, of course, by storms, hurricanes, and strikes, but there's more nuance to come. If you look at what the unemployment rate is, that remained at 4.1. So people are going to scratch their heads. Hey, lousy jobs report. Why 4.1? Because the rate comes from the household survey, and the household survey counts those that are off work, absent due to strikes and storms. So they're counted as employed. It remains at 4.1%. Now, let's look at the average hourly earnings month over month. They remain sticky, up 0.4. I would think that's a good thing. We're expecting a 0.3 number, and in the rearview mirror, the 0.4 was revised to 0.3. Now, if we look at year-over-year perspective, it also remained at 4%. 4% was the original release last month. That was downgraded just like the month-over-month to 3.9. So it's hotter technically, but as expected and prior to revision, it was equal to last month. Now, if we look at the work week, 34.3, it built a little bit more in. It went from 34.2 to 34.3. And last month, a revision, late revision. So it moves up from 0.2 to 0.3. It equals that. Why is that so important? Sometimes less hours worked has a tendency to kind of artificially boost wages. And finally, let's look at the labor force participation rate. 62.7 expected, 62.7 in the rearview mirror, but it comes in participation light, 62.6, which equals where we were in June. To find a lighter number, you have to go to the month before that, to May. And finally, the underemployment rate. 4.1 is called U3. That's the normal employment rate we use in all data. The underemployment rate, known as U6, comes in at 7.7, where it was last month. To find a higher number, you'd have to go to August when it was 7.9. So we have made some progress there. The market's very volatile. We've seen a trade close to 432. We've seen a trade down around 423. Those are, of course, in 10-year yields. It's currently trading at 425 and change. Do keep in mind that it closed last week at 424, so it's still up in yield on the week. And at 411, we see that the 2-year note has given back quite a bit of ground here. It was at 420 prior to the number. So an outsized effect was expected with the weak number, which everybody predicted. But with all the nuance here, for all the variables that potentially made this jobs light, the market is paying very close attention, trying to get it right in the big picture. Becky and the panel, back to you.
This is what I was not hoping, I guess, is because now there's another cloud over top of us. Because now you really can't say, well, there was only 12,000, people employed, because you don't really have the true data behind everything. So how this is going to affect what the Federal Reserve does, and the reason why this is a huge report is right there here. The Federal Reserve's meeting in 6 days telling us what they're going to do. So right now, basically, the probability just spiked up to, let's go to this so you can see it a little bit better. I'm almost going to say 100%. So we're seeing that right through there. So they actually, even the CME FedWatch tool, they actually took off where we are right now. So let me show you what this is. This is the FedWatch tool. We go over it every day. But to put it in perspective, let's go back to this caption right through here. This is basically the economy that we're seeing, or what the Federal Reserve sees. And we go across here, and this is saying that the federal funds rate right now that the Federal Reserve controls is 4.75 to 5. You need to know that, okay? Because that's where the directions that were. This is our entry point, all right? PCE just came down. Last reading, it was just yesterday. It came down to 2.1, so they're 0.1 off of where the Federal Reserve wants it. The unemployment rate remains at 4.1. That's still a head scratcher, and GDP is still robust at over 2%. So how's the equity markets doing this? They love it. There's green all the way across the board. Cool thing also is the VIX. VIX is coming down, saying that the markets are stabilizing a little bit. Cryptocurrency, I think, is giving it back a little bit. No, it's actually picking back up to 71,000. Let's check the oil. Oil was at 71. That was a big spike. We had 68 not too long ago. Reports Iran preparing strikes on Israel. So this is going to cause more conflicts in here. But, oil is a big piece of the inflation number that we watch on a daily basis. So we're going to still pay attention to this as well. So again, the Federal Reserve is expected to almost at a 90% pace right now. They're expected to bring us to 4.5 to 4.75 on the federal funds rate. That means they're going to cut 0.25% at the next meeting next week. So that's basically today's report. And that's the news that we were waiting for all week. We were waiting for the PCE and the jobs numbers, and now we have it. So getting back to, let's see what the bond market's reacting to this. MBS has spiked right when the news came out. You could see that right through here. So this is what we follow on a daily basis. We try to figure out what's going on with mortgage rates because I'm a mortgage loan officer. I on this channel, I try to teach you loan programs, give you access to down payment assistance programs, give you all the possibilities of any, kind of loan program that's out there. No, if you're looking to buy that first house, maybe buy that first investment property, that's what we do here. So this is what you're seeing right through here. This is actually, when it's recorded on the screen, it's actually showing you the price of a bond. Most bonds will show you the yield, so we have to figure this one out. So how you do it is just look at the price of the bond, which is right up there, and you can't, if you squint a little bit, you can see in the background 0.15 up. It's green. I got a green screen behind me, so sorry, the green doesn't show up. But out of the gate today, the market was just stabilized, and then you got the report, and it went woof all the way up. It was up 22 or 25, and then it's giving back just a little bit, and we're still up 15 ticks. So that means mortgage rates are going to come down a little bit today. Might come down about, we might be right at about 7% by the end of the day. So I never thought I would be saying, hey, 7% is fantastic, but that's where we're going to be right now. If you're looking for some help, if you're running into some problems with a lender, or you're just out there saying, Dan, I need a mortgage person somewhere in the country to help me, I'm licensed in all 50 states as well as Puerto Rico. So if you're out there and you need some help, I'd love to help you. How do you reach me? Go to therateupdate.com. Here's my website. You can go all the way across. We're revamping the Apply Now button right now. It's going to actually give you a few questions to narrow it down, so when you talk to me, I know exactly what you're looking for. But first thing I want you to do is, if you're looking for that first house, check out the grant finder programs that we have right here. These are handpicked by us, so check those out. Because why we handpick these are basically the freest, as close to as free money as you could possibly get when you're getting this. And then you have loan estimates, calculators, and the whole list of slew of things down through there. So when you're on the website, you can scroll down, see all kind of different blogs and things. We did create a sync rate here a couple weeks ago. If you're looking to refinance, you could tell us what rate you want. When the market hits that rate, we'll be on the phone with you to get that paperwork started. But if you continue down through the website, you're going to see our 800 number as well as my email address, and it is coming up right through there. So that is my information. Hope you find value in my channel. If you do, don't forget to subscribe over there, and I'll be back at the closing bell to let you guys know how all this mess ended and how low rates got for the day. So thanks again for watching. Have a great day. Bye-bye.